Again, I just got to wonder, are these markets going to melt up or not? Or are they just going to come down first? Someone was sending me some links from Martin Armstrong a while ago where he thought we'd have a melt up followed by a melt down, right after. But I don't know. I'll look at this, like, for example, this story I want to talk to you about from Zero Hedge. This guy, hedge fund returns hundreds of millions to clients, returning their money back. Look, basically saying, I don't want to play this game for you because we may end up losing, so I would rather give you your money back. He says, this market is crazy. Hedge fund returns hundreds of millions to clients, citing imminent calamity. So this guy is citing what he's saying is an imminent calamity. Well, if you're going to return your clients' funds back to them, clearly the market's not going up in your eyes, right? Because if it was, you'd keep their money and say, hey, look what, you're paying me 2-3% constantly for doing such a good job with your money, of course, which, of course, hedge funds get. You're paying whether you like it or not. Market's down, you're paying 2%. Market's up, you're paying 2% to them, roughly. So when one of these guys says, I'd rather give the money back, all I can think of, market's melting up, Lindsey Williams' elite friend. Could it really be? Again, the guy's been wrong now over and over again in the last few years. So this so-called elite friend, why should we believe him now? Oh, he got it right this time after several failed attempts. Again, everything I look at, the data I present you, the things that I show you are more than proof. This market ain't got no business climbing. Stock market should have been crashed by now. But Federal Reserve, European Central Bank, Japanese Central Bank, everybody just let's buy, basically backdoor buying of stocks, propping up everything. But for this hedge fund, none of that matters. He still thinks a calamity is coming. So let's see. While hardly a novel claim, in the past many have warned, which perhaps this is why, it's Australia. But anyways, let's see. While hardly, and which specific markets he talking about? We're going to find that out. It's one that I've been talking to you about quite heavily lately. While hardly a novel claim, in the past many have warned that Australia's housing and stock market are massive asset bubbles, which local banks have been forced to deny, as their fates are closely intertwined with asset prices, even as the RBA is increasingly worried. So far, few, if any, have gone the distance of putting their money where their mouth was. That changed when Australian asset manager Altair Asset Management made the extraordinary decision to liquidate its Australian shares funds and return hundreds of millions of dollars to its clients, according to the Sydney Morning Herald, citing an impending property market calamity. Property market, real estate market calamity, you don't say. And the overvalued and dangerous time in this cycle, he says. Giving up management and performance fees, as I just talked to you about, that which normally 2%. Giving up management and performance fees and handing back cash from investments managed by us is a seminal decision. However, preserving clients' assets is what all fund managers should put before their own interests. So this guy clearly is one of the very, very few who are going to do, quote unquote, doing the right thing. I'm not going to look after my own company's profits and just keep going when I know I could see a calamity from a mile away coming. I want to show my clients, I'd rather give you your money back. We made whatever money we made all these years. We're done. Sell off. Here's your money back. Do what you want with it. And you know what some of those people are going to do? Well, let me go to another management fund. Let me go to another fund manager. See what he can do. Okay. And for those of you who do that over in Australia, I wish you a lot of luck with that. You better hope you pick the right one who didn't happen to have, all of your eggs in the wrong basket or baskets. The 30-year investing veteran said that on May 15th, he had advised Altair clients that he planned to sell all the underlying shares in the Altair unit trusts and to then hand back the cash to those same managed fund investors. Parker also said he had disbanded the team for time being, including his investment committee comprising of several prominent bears such as former Morgan Stanley chief economist and noted bear Gerard Minek and former UBS economist Stephen Roberts. Parker said he wanted to make clear this is not a winding up of Altair, but a decision to hand back client monies out of the equities which I deem to be far too risky at this point. We think that there is too much risk in this market at the moment. We think it's crazy, Parker said with a candidness few of his colleagues are capable of, at least when still managing money. Valuations are stretched, property is massively overstretched, and most of the companies that we follow are at our 1-year rolling return targets. And that's after we've ticked them up over the past year. Now we are asking, is there any more juice in these companies' valuations? And the answer is stridently, and with very few exceptions, no, there isn't. Parker outlined a list of the more obvious reasons to exit the riskier asset markets of shares and property. And these include, there's 4 of them it looks like, the Australian East Coast property market bubble and its impending correction. By the way, if I may, this was forecast to you well in advance by the Webbot reports. It started telling us Australia is now going to have a housing market problem after it already talked about Canada a little bit, we had been talking about America, and then all of a sudden Australia is brought up. They're going to have some major housing real estate problems. And this isn't the first time I have to mention Australia regarding anything real estate related, but this is another time. Again, got to give credit where credit's due. Webbot called it way in advance. So anyways, the 4 things include the Australian East Coast property market bubble and its impending correction. Worries that issues around China's hot property sector and escalating debt levels will blow up later this year. He thinks later this year by chance. Again, when I hear the word later this year, I can't help but think September 23rd, 2017, the major super duper astrological alignment of Jesus being born through the Virgin Virgo star cluster, whatever. But I thought that was a real life story. I thought Jesus was actually born from a virgin. God flicked his magic wand and she gave birth. No, it's astrological. Just in case you're wondering, it's astrological. The 3 kings, but you're talking about Jason, the 3 kings came to what? No. The 3 kings, same 3 stars that have been in the sky, and they're still called the 3 kings. 3 kings in the sky, Virgo the Virgin, right. But I don't want to upset my religious peeps. So we're not going there. This has nothing to do with that, but I do want to mention it because it just so happens to be later this year, again, right around September 23rd, and that's a date we keep seeing in these freaking Hollywood movies. So whatever, let's see what it brings. But he's, as he said, is number 2, worries that issues around China's hot property sector and escalating debt levels will blow up later this year. Also, oversized geopolitical risks and an unpredictable U.S. political environment. And finally, in the overvalued Aussie equity market or stock market. But to Parker, it was the overheated local property market that was the clearest and most present danger. He said, when you speak to people candidly in the banks, they'll tell you very specifically that they are extraordinarily worried about the over-leverage of the Australian population in general, he said. He flagged how exposed the country's lenders were to a correction. If they get a property downturn, anything similar to 1989 to 91, then they are going to have all sorts of issues, Parker said. Parker's decision comes after a robust year of double-digit gains on the ASX. Not only that, but he is acting on his convictions by returning money to clients and abandoning the fees attached to a $2 billion advisory agreement. you got to be pretty darn sure something's not looking good for you to just cough that kind of money up, as far as getting fees off of. Parker, however, displayed little nervousness about making such a significant decision. In fact, he said he has never been more certain of anything. No kidding. Let me tell you, he says, let me tell you, I've never been more certain of anything in my life. I am absolutely certain we are in a bubble in this property market. Mortgage fraud is endemic. It's systemic. It's just terrible what's going on. When you've got 30-year-olds who have never seen a property downturn before, borrowing up to 80% to buy 3 and 4 apartments, it's a bubble. I like the way this guy thinks and like what he's reading because he's right. Buy 2 houses, buy 3. We're going to flip them anyways. The property never goes down. Just keep going, do it. It already happened in 2008 and 9. But as I said 400 times now, turn on the radio, even TV. Flip that property, flip it. Come to our seminar. We're going to teach you how to flip, baby. Crappy credit, we'll get you hooked up. Good credit, well, you're already hooked up. We'll teach you the next steps. Cost you a fee to come to our, little gathering here. So if that was the case, and the property market was such a good thing to get into, these people hosting this garbage nonsense about flipping houses, they would be able to find an investment group that would give them the funding to do this themselves. And they'd have so much funding, they would hire talent in all of the damn states. And not only in all the states in America, but all of the hot cities, all the big cities in all of the states. You'd have a team of people. We've got major backing. We've got billions and billions of dollars from the investment group. Guys, go flip and return money for our investors. And you're going to make commissions on it. When you take a house you bought for $150K and it sells for $300 because you fixed it up, we had to put $50,000 in it. So $150, we got $200 into it, made a cool $100,000. You're going to get a nice commission off that $100,000. Investors are going to get their money back plus their fees. Life's going to be good. No, we're not going to do that. Let's offer seminars to teach other people to do it. Whenever you hear, let me just give you some advice or some little input here. And just in case you don't know this already, many of you are probably like, oh, we know that. But those who may not, anytime you ever hear something on TV like that or radio where we're going to teach you how to do this or seminar, I'm going to show you that, that's the sign that the party's over. They've already made all their money. Now they're going to teach everybody how to do it. A few people may get lucky and make a couple of dollars here and there. They may have them stand up on stage. Hey, you took our program 6 months ago and you flipped 2 houses. Hey, I want Billy, come up, Billy. Billy's got a story to tell. Billy's going to tell you his story. Billy is going to tell you his story. Speaking of Billy, name that movie. Billy, I want to be on Jeopardy. Billy, I need to be on Jeopardy. That's kind of a Puerto Rican woman's accent. That was horrible. 90s movie, good movie. Billy, I need to be on Jeopardy, Billy. So anyways, this guy is absolutely certain. Never been more certain about anything in his life, he said. In a rather dire forecast, Parker outlined a situation where the stock market could fall as low as 5,200 points in the coming months, depending on the confluence of his identified risk factors. Now, that's his stock market. I'm pretty sure he's not talking about the Dow Jones, being in Australia. Australia hasn't had its GFC event. We've been living in this fool's paradise. But if China slows down the way the guy thinks it will towards the end of this year, then that's 70% of our exports affected. You can already see that the commodity market is turning down. Some speculated whether there is another motive behind the sudden shuttering, but Parker stridently denied any suggestion that there were other factors at play other than a pure investment decision. No personal issues, no position that had blown up and forced his hand. No God, no, he said. We've sold out all of our positions at huge profits for our clients. We're done. That's what he's saying. This game is all about reputation. I feel that we are right. Again, made you all a bunch of money. Here's your profits. The rest of your money you got in here, you want me to play with. I'm not playing with it anymore. I've seen enough. It's not looking good. I've seen numerous factors I'm looking at here that are saying flashing red light. This should have already crashed. This should already have gone down. Get out now. And ladies and gentlemen, it was a pleasure working with you, but I'm shutting it down. As Chef Ramsay would say, shut it down. Red team, shut it down. Piss off upstairs. Shut it down. Again, this game is all about reputation, and I feel that we are right, he said. For now, Mr. Parker said he was happy to take some time off. Quote, I've never had more than 5 weeks off in a row. I'm probably going to have 4 months in a row. And if something happens in between, I'll think about it. Otherwise, I'll enjoy the time off. Come to think of it, in this market, that may be the smartest thing to do, says Zero Hedge. Talk about getting out at the top. And I don't know if what he's mostly invested in had to do with real estate stuff. I don't know. But from the sounds of it, stock market over there and real estate, from the sounds of this. But Lindsey Williams' friend said we're going to have a melt up first. Dow Jones 40, 50,000 coming to a country near you soon. Now here's a possible. Again, I did a video yesterday or the day before, whatever the hell it was. I said there's actually a possibility that these markets actually melt up. Insane as that may sound, it may actually happen. And here's a couple reasons why. I'm gonna give you a third reason why. Which I wouldn't bank on. Don't bank on this and get into the stock market. I'm not playing that game. I'm not playing a game where people behind the scenes are rigging things. I like to play the game called Bitcoin cryptocurrencies, where these same people are not in there rigging things because their systems to rig things aren't available for that. That's where my money's at right now. Of course, precious metals in the safe in the undisclosed location. But here's a third reason why maybe the United States stock market just might in fact go up. Like no crash, just 30,000, 35, 40,000, that kind of thing. All of the other world's market, Australia goes down, European markets go down, China markets go down, and everybody on the face of the earth says, why in the hell are our markets going down over here? But the United States market isn't really being affected right now with that. And all they need to know is as fast as possible, we need to take these losses we've just incurred over the last week or whatever it may have been and dump them into the American exchanges because they're just, for whatever reason, they must have a fantastic economy. Something's happening, whatever. I don't care don't care the reason. We just got to get some money, some interest in here. So we're going to dump tons of money into the American stock market. You could see that. You could see the rest of the world markets going down, 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 down. And U.S. is this beautiful shining light. Come over here. Our markets are wonderful. Come on in. Again, it's completely fraudulent. And I wouldn't dare play that game. But we also might find it just doesn't matter. End of the year is coming. It's go time for the debt ceiling nonsense, government problems here. And if we have any kind of government shutdown now, and again, you see how they're on Trump right now. If we have any kind of government shutdown, this is not going to be good for our markets. How the hell are they going to pump that up? Even faking it. How the hell is the Fed going to just pump that up? American is now in the debt ceiling spiral, and this happened and that happened, and market's looking great. I don't think they'd be able to fake it. They'd have to let them loose. So we still have that possibility. Again, everything in my body tells me this market has to come down. This is beyond insane. This makes no sense whatsoever. But you could still argue, but if the Fed is pumping it up and they just keep printing money and buying it all up, why can't it continue? And that's a very good argument. It's a very good argument. But Lindsey's original guy, Ken Fromm, who got all the stuff right, did tell him after 2008, we were going to have this big melt up, essentially. When it goes higher, you're going to think it can't go any higher. It's going to go higher than that. When it goes that high, it's going to go even higher. When you say it can't go high, it's going to go higher. They're going to pull every last sucker into the market. That's what he said. And they will pull the rug out. And he talked about the Federal Reserve printing money and buying back the bonds and all this crap. And he said they would do that for a period of time, but they will not be able to do that forever. They will have to stop. And it's when they stop, when the music stops, essentially, and the rug gets pulled out. I still think it has to be like later this year, at least get started. 2018 comes around, this is really bad news. Because here's the thing, Economist Magazine, right, talked about to get ready for a new world currency, 2018. As I discussed the other day, the central banks around the world, they now have a special account with the IMF, putting SDRs, which is the IMF's currency, in those accounts finally, when they did, even though they've had access to do so, no one's ever done anything. And then all of a sudden this year, we're getting started now. We're going to go ahead and start putting the SDRs in there, so that we can all central banks have a line of, I don't know if you want to call it credit or whatever, a swap line of different currencies from, different countries. That now includes the IMF. And now they've got some currency in there finally, when they didn't before. So if that's happening, again, that tells me this get ready for 2018 thing that the Economist magazine of 1988 talked about, where dollars getting crumbled and everything else. You can't have all that stuff happening and have all these just strong stock markets. Doesn't make sense. But if there's big devaluations in currencies, then it does make sense. Just look at Venezuela. Their stock market has gone up 17 times what it used to be. Now, in all fairness, their dollar has been devalued far more than 17 times. As crazy as that sounds. And especially when you look at the black market, and that's the only thing that matters over there anyways, because that's what people on the street are dealing with. So while it looks good, stock market went up 17 times, that would only look good if their Venezuelan dollar, or what's it called? I can't think of the name of their currency, whatever. If it went down 17 times, be like basically $17 is now worth $1. That's the equivalent, right? $17 worth of buying something is now worth $1. So, or maybe that's backwards. I'm trying to make a good analogy here. $17, what $17 used to buy wouldn't make sense for $1 to buy, because that would be the other way around. So what $1 used to buy, it now takes $17 to buy, okay? So this little handy-dandy recorder I've had here for a long time, right here, let's say this was $1. $1 could buy this, okay? Now it takes 17. In that scenario, you would expect to see that stock market of that country go up 17 times. If you look at Venezuela, their dollar didn't just plummet by 17 times, if you will. It's far worse, which means that 17 times gain in the stock market is meaningless. I mean, sure, if you had some stocks and you sold it right now, you'd get some decent money back. But if you had something like, I don't know, this right here, some silver in your hand, and did the same thing, that's going to outperform what your stock market was bringing back. Because that's your local stock market. This is a global thing that's basically set in US dollars, just silver. Which is why, I think it was last year now when I first did the video, one silver coin, an ounce, today, $17.50 or whatever the hell it's at right now, $17 plus, could buy you months worth of food. You want to, I don't know the numbers now, but because their dollar is just getting devalued worse and worse, you may be able to take this. Quite possibly, I'm not 100% sure, because I don't know what the hell the math is right now. It's just insane. You might be able to buy a freaking year's worth of groceries with one or maybe two of those right now in Venezuela. So, anyways, it could go either way. I've given you numerous examples as to why. None of this crap makes sense, but everything in my body says, get away from that freaking market. I'm not playing that game. And certainly because Lindsey Williams' friend has come out now to say, it's going to melt up, when in fact nothing this guy has said, again, has worked out. He was the guy in the beginning of this year that said, nope, reversal, guys, everything's going to go up, invest in American companies, and make money. I don't know about you, but I understand the top 3 or 4 or 5, S&P companies, Dow companies. But if you look at the number of companies in those, like in the Dow or in the S&P, and you take the bottom massive majority, they're in the red. They're losing money. These companies would have been horrible investments if you invested in them individually. But since the top 5 of the biggest, brightest, best companies are in the S&P or whatever, S&P's up, man. They're doing great. What about other things? Again, certain stocks like Google, certain ones, they've done good. But if you, on a whole, invested, like Lindsay said earlier this year, you probably wouldn't be doing too good. Unless you got in the Dow, the S&P, But that's not what he said. He was talking about invest back in America, American companies, they're going to come up, you're going to make money, essentially, because he bought the whole thing that Trump was saying. We're going to bring companies back. We're going to make the stuff back here in America. We're taking that back out of Mexico. We're going to make deals with these big companies to bring them back. And that's the stuff he was talking about investing in. Well, one of those companies, Ford. Ford. I'm going to look at Ford stock price right now. We're going to look at a 1 year. And the high was $13.92, July 2016. Today, it's $10.86. And in case you're wondering what well, I'll just show you in case you want to see. Here we are, January, February, March, big decline. And we just have this is a trend here, right? This is not a one-off. January, February, March, April, May, June right here coming up. Not looking good for Ford. That's one of the companies. What was that air conditioning company? Donald Trump air conditioning company. What? I'll find it. Carrier air conditioning stock. I'm curious. I have not looked this up prior to doing this video. We may find that they're doing great. Carrier Corporation stocks. It's not. Let me pause and I'll keep you waiting. Hang on. All right. So here's Carrier. 1 year down to 101 or so. Right now, it's up. It's still up, baby. 122. Interesting thing happened, though. Look at this. August of last year hit the peak, 109. August, down. September, down. October, down again. Back down to 100 now. And then right here, what happens? November 4th, 8th. Oh, Trump won. He made the deal. Jumped up. Right, so this is what we call the Trump train. But if you look at the 3 month, again, March, April, a little dip here, and then we're starting to see going over the mountain, as I like to say, or what they call a dead cat bounce sometimes. That's one example of, hey, that company is going to do well. But again, there are a ton of companies that are not doing well right now. A ton of them. So now we're told the stock markets are just going to melt up massively. Again, he could get it right. And if that happens, I'm going to have to cover it. Hey, for whatever reason, Lindsay's guy, who hasn't got anything right in years, got it right. And the stock markets have now melted up. I may be coming out here to do a video. Why? Because I'm Realist News and I'm going to keep it real one way or the other. I'm not playing that. I can't possibly put my money into something like that. I'm playing with some Bitcoin. And I know a lot of you are too. Take care.